The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another special edition of the Power Trading Hour. It's special because you're there and I'm here. And as always, when news breaks, we at TFNN aim to fix it. And we've got the FOMC meeting announcement out. And there is no change. Probably the only thing is a slight revision to the way they've worded it. And it basically says that they will be totally out by probably September or October. Wording is not exact. But basically, they're going to be doing $10 billion less every single month until it's gone. And then they're going to look at interest rates. But they're going to say, right now, we're going to keep those interest rates right where they are. But all that $10 billion's away. And, of course, what happens when you pull the morphine IV drip of $1 trillion in bond purchases a year away? And I think we can probably all understand what happens when you start talking trillions that go away. A trillion here, a trillion there. Soon you're talking real money. So we've got, pretty much flat market up a little bit. Market's going to try to digest what's going on. And the bulls and CNBC are going to tell everybody why this is actually good news, why they feared it so long. But that means that the economy must be better than we thought. And it didn't really matter what the news was going to be. They wanted to try to drive this market up. The real question is going to be what actually happens when traders have to look at the last 30 minutes of trading. And I suspect that, at least I'm betting, that we are looking at lower prices. But we shall see and see what happens in the next hour. A lot of times these first reactions muted incorrectly. We're going to go through earnings over the last 24 hours. Earnings over the last 48, 72 hours have not been good comparatively for what people are telling everybody in the press. And, there's some that are up, some that are down. But the ones that are down are hugely overwhelming those that are up. So let's just see what we have right now. See if I have a quote. Okay, we're at 1880 on the S&P cash. We've got a little over 2 billion shares as we start the show. So we'll keep an eye on that, but probably a little too early to tell. I suspect they're going to try to push this thing up for a little while. We'll see if anybody comes and bites. But if you were predicating your bull market move based on the QE not being eradicated before the end of the year, you lost. Now, whether or not the market decides to do that, it's in a giddy, almost manic move out here for so many stocks that aren't doing well to have the S&P up. Very interesting. But leadership always gets narrow at the very top. And, of course, we'll continue to keep an eye on it. But it doesn't look like there's a whole lot of energy yet looking to push these markets higher. I've been out buying some puts, and I think we've probably got a good handle on those. And we'll have to see how they come out. But I think there is some good put action out there in some individual stocks right now. And as Terry in the Den says, it's too early to tell. We need to wait and see how everybody digests this and just find out how the bulls that will show up on the financial infotainment shows will all have to tell us how this is really good for everybody. That this is the best thing. It just proves that the economy is getting better. And we can make up that $80 billion every month with what? Anyway, my thought is that they've already given us the clues that they will start raising interest rates sometime around January or February after all the QE's done. And normally you can say that the markets look ahead somewhere between 6 and 9 months. And we are certainly in that window, at least at the farthest end of that window of whether or not interest rates will be going higher next year. I suspect that they will be, and only slightly. And the Fed is probably looking at the bubbles that it's created in this market, and a few of them have already blown up. We're going to look at a few of those today. Anyway, when we go back and look at history, as we like to start the show off with, in 1803, President Thomas Jefferson signs the Louisiana Purchase, paying Napoleon Bonaparte $15 million for 828,000 square miles of territory. Probably just an apartment in New York goes for that now, which stretches from the Mississippi River to the Rockies and the Gulf of Mexico to the Canadian border. In a stroke of a pen, the United States nearly doubles in size, and a huge frontier of opportunity opens up for its citizens. The U.S. finances the deal by borrowing $11.25 million in 6% bonds from European investors. And, of course, what is that? About 2 seconds of spending today, 11 million, probably about 1.5 and maybe a handful of milliseconds of spending for the U.S. government now. Seems rather cheap. And probably a good deal in retrospect. In this day, in 1999, Priceline.com, which had gone public at $16 a share exactly 1 month earlier, closes the day at $162.37, giving the tiny internet company 1 month return of 914% and a total market value of $23 billion. It's probably the fastest and stupidest stock run-up ever recorded. It's all down here for a hill. And Priceline.com ends up losing 99% of its value by the end of 2000. A cautionary tale, but also one that tells us that a lot of these IPOs, horribly overpriced, may have a good long-term future if we can let them base out and finally do what they're supposed to do. Most of these things are ridiculously priced, and we've seen these things come off a fairly high levels, and we're going to look at a couple of those today that I think, if we have time. You can always give me a call at 877-927-6648. That's 877-927-6648. You can post a message in the den, or you can email me at path@tfnn.com, and we'll try to look at your stock during the day. I heard somebody call in about 3D stocks last night to Tom's show, and I sent him a brief IM about what was going on. But 3D stocks, I sent out a special report to my subscribers to the Technology Insider on January 13th, saying this was the second and last blow-off top in the sector, and look to short these. We did in both the daily and investment newsletter. Hit them a couple of times, some of them, some of the other 3D stocks. But I know at these levels everybody's wanting to take a look at these one more time. But kind of funny because I looked up why Tom was talking to the guy and saw that GE was talking about them coming out with their huge line of 3D printers. We've got HP coming out mid-summer with their line of printers. And probably who's better off at making money on consumables than HP. I'd be hard-pressed to say that these guys are going to have the same profit margin they had before. I think that there's a lot of great things that some of these companies have done, but sitting there and rolling all over CNBC when their price was probably 1% close to its highs, now that today it's 50% off on some of these stocks, and we'll look at them. But we're going to continue to ratchet these things down, I think, until we get a good look at what HP and GE does this year. So when these big stocks come off, they just don't rally the next day. You're going to need some consolidation. I think this is probably one of the things that if I was talking to people, I'd want to get through to them. And that is that when you have these huge highs, let's say like 3D Systems, when was it? Okay. So if you're watching on Tiger TV, there's the 13th of January when I said I was pretty sure we had the blow off top in this thing, done a couple of times, and made some good wood on this trade a couple of times in it. But what do we know about these kind of trades? And that is that even if today was the low, you've got to have some consolidation after damage in a stock like this. Unless they became and figured out how to make lead into gold, you've got a lot of overhead resistance now of everybody that's been buying this thing on the way down, or the people that never sold it that are just dying to get their cash back. Of course, especially when you get into stocks that have all the buzz, that have all the hysteria when we look at them, you really want to know that maybe there's a good business underneath it. But it doesn't matter. We had 15 million shares to the downside yesterday. That means you've got to test that 43.35 from yesterday's low. Doesn't matter what some BS guy said about upgrading the stock, which is the reason I think it's up a little bit today. But it'll probably bounce around here between here and $50 or so, and it'll come on down one more time at 43.35. And my guess is this thing actually split 2 for 3 at one time. I remember, I think we'd bought it originally at 16 or 17 bucks. So what? 2 for 3. What does that make it? About 13 bucks. And wrote it up. Had a fairly decent profit in the thing. Sold it way too early. Didn't know the hysteria would come along, but we made a good bet on this thing on the way up. Then it went into Astroland. Split adjusted. I bought it at 11. Thanks. But anyway, it is a great deal. Okay, thanks, Z. But these are not bad companies. Some of them are highly leveraged, especially from their IPOs, like VoxelJet and X1, and maybe we'll look at those later. But I don't know where the idea is that these things can get cut in half, or more than half in the case of DDD, and these things just instantly go back up. What you are looking for is a long and protracted consolidation at a price, and you want everybody to quit talking about these stocks. And at that point, this probably will be a good deal. And in fact, if it came down probably more in the $30 range, I'd like it a lot better where it originally took off. It could be one of these kind of Priceline stocks, but it's going to probably go through the same problems that Priceline did. Priceline, of course, eventually goes up to 1,200 and some odd bucks, but it is interesting. But anyway, keep an eye on these. They eventually will probably be good, either buyouts or stuff like that. But this is going to be the lean years for 3D printers as the big companies come in. And hey, if anybody knows the computer revolution, how many Osborne's companies were still around and went away, or digitals, in a fast-moving business?
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, markets drifting up a little bit, a couple of points, 3.5 points on the futures anyway, and not a lot of action out here so far, so we'll keep an eye on this. But it's all about earnings, and of course, had a great deal of them. We're going to go through some of them here today. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can post something in the den. Another nice comment from Terry. I don't remember the last Fed day with so little volatility. Very, very quiet out here, but it looks to me like they're probably thinking about waiting for some earnings tonight. Maybe they know something I don't, but these earnings have been just flat out ugly, and it is part of it. Charles River Laboratory, this is a pattern that I've seen a great deal over the last few days, and that is a lot of these companies come out with earnings or additional information. They open the day up much higher on their earnings. In the case of Charles River's Labs today, got to a high of 55.55, and of course, I'll have to look for a current quote, but looking around 53.24 now. Not a lot of volume in these moves, so it's not like anything's happening. Of course, it's been a very narrow range for the futures, but just a ton of these have all opened up and continued to sell off, whether they've been up or lower. A lot of them are off of the lows that we saw earlier in the morning. DreamWorks Animation, SKG, of course, the movie maker. And everybody's pretty quick to always punt these movie companies. The reason why is it's so easy to have one bomb and can take out a movie studio. We've seen many of those in the 70s, 80s, and 90s go bye-bye on one or two big bombs. And that is problematic. And, of course, problems with any earnings they have right now. But down on heavy volume back into these larger gaps. And there's one more down here at 20. I suspect with the volume we see here today, this thing is just going to continue to work its way back down. eBay, another one. This one, kind of more of a little dragonfly out here. And this thing's down on heavy volume, already broken the previous low by 3 million shares from January 10th. Looks to me like it's probably going to be ready, and it may bounce around here above that $51 level. But it looks to me like it's already busted it, at least on volume. Your next level down on eBay is about $48.06. Of course, this is one that the old Godfather, the old peaceful Godfather, been rattling the cage of the owners on about selling PayPal. And more PayPal becomes a bigger percentage of the company's revenues. A long time ago, they decided to make a change. I think this is right after Meg Whitman left the company, and really start charging a lot of the vendors at eBay a great deal more. Cut down a great deal on the amount of vendors, also the competitiveness of that marketplace. And it was fairly easy, for the most part, for Amazon to come in and swoop up a lot of people that normally would have been buying things in the auctions of eBay at the agreed upon price in at the time, without having to go through the auction process. And I think that if anything, they made a mistake over the years. It was doing that. But certainly down on heavy volume, and that $48 level is open on eBay. Energizer Holdings, they're going to split their company up, and everybody, pretty much likes this. But again, you start off pretty high and you kind of sell off most of the day, and that has been pretty much the standard. This thing has all the volume in the world, probably not going to come back and fill that gap too quickly, but this thing may be it may have overshot just a little, but I think it had a decent short interest, and that's probably a little bit about what's going on here. I don't expect that I would short this, but everybody loves M&A business, and I suspect that there were a lot of people out here already and ready to go after this one today. Express Scripts, another one of these that blew up. One of the few out here that's actually higher than the open price, although it did get down to 64 this morning. Of course, heavy volume out here. You've got 20 million shares at the last major low at 59.20. And we'll keep an eye on that as we go to break. Give me a call, 877-927-6648. Email me at path@tfnn.com or post a message in the den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
It sounds like water dripping because that's what it's like. Just not much happening here in the market. A very, very quiet response to FOMC meeting, up 350 on $3.50 on the S&P cash, which is normally what we look at. The volume since the announcement also incredibly light. I think we had about 2 billion shares on the New York Stock Exchange consolidated tape as we started the show. We've got about 2.2 billion. So this is going to be a very light volume day. And I have a feeling we're probably not going to know a lot till the last 30 minutes of the show. Not the show, but of the day. And it will probably be time to pour a nice good one at 4 o'clock. Going into all these earnings that we have yet tonight. So there will be a great deal more out here as we go through earnings. And see what else do we have. I don't think anybody has a lot of questions right now. We do have a few stocks that are busting out. And one of those is FISSERV, FISV is the symbol if you're not familiar with this one. It doesn't get a lot of attention, but certainly one of the few stocks that's actually busting out. See some decent volume out here today. 2.2 billion shares already, when most of the highs are 1 million, 750,000, something like that. You actually had 2 million shares at a lower high on April 4th, but not a bad looking chart out here. The question is whether or not it can hold it. We've seen so many of these get 1, 2, 3 days out of the top, and then that's it. This provides financial services, technology worldwide. The company Payments and Industry Products offers electronic bill payment and presentment, card-based transaction processing, network services. Nice build-up here, though. If you want a consolidation and a sign of strength, right now you have a decent candle out here. Volume 2.2. You're probably going to end up with 3 million shares probably by the end of the day if you get anything. But there are a few stocks out here that truly look bullish. I would have liked to seen a little bit more into earnings out here. But what can you say? To Garmin, another one up here at these highs with volume, but it's come back and is below the previous high. You needed 2.9 million shares. You got 3.1 already from the March 27th high. 58.21, but you want these things to stick and hold these highs. Garmin, of course, has been trying to change their business out of the GPS business into more of a kind of GoPro for cars business, especially in Europe. They've gotten some traction. They've also gotten some traction by selling maps and aeronautical maps for aquatic maps. And they've done fairly well, but a lot of that business is going to start tapering off here now. And the question is, without a real business in GPS left, what are these companies going to do? And, of course, they're going to have to adapt and overcome. Garmin's done a fairly good job. I thought this thing would probably be $10 by now, but they're at least keeping the hope alive. And high volume up here, but you got to hold those highs, and I'd say about 90% of the stocks that are busting out are not holding those highs. Another one that never really paid a lot of attention to is LogMeIn. It sounds like maybe some kind of Chinese menu thing, doesn't it? It's just LogMeIn. It is a cloud-based collaboration, IT management, customer service offering to address multiple device security, management, and accessibility requirements of the new mobile workplace in the United States. So why can't they just say, we offer security options for business where you're using tablets or smartphones? That would be, but I guess that if you're writing that kind of stuff, you're paid by the word, aren't you? You just can't make it simple. And collaboration. I guess everybody can stand around on their smartphones waiting in line at lunch and collaborate. I just don't see that much collaborating out there on mobile devices, but it sounds cool and sexy. I think more of the security would probably be something that would interest me. LogMeIn, huh? Is that what that's supposed to be? LogMeIn? LogMeIn. So LogMeIn. I think it sounds more to me like a Chinese menu offering right next to General Cho's chicken or something. Anyway, LogMeIn. Marriott, another one out here with new highs. Would like to see a lot more volume out here. Of course, this thing has pulled back to the previous high from the 24th. Decent volume, better volume than the 24th out here, but not holding everything that you would like it to hold, at least. So we'll keep an eye on that. But another one out here, talked a little bit about it in Tom's show last night. And that's just how much a failed IPO that Noodles and Company has been. When you look at this thing, it went public. A lot of volume, one of these first stocks to really have a good day. But if you want to see what true distribution is, this is a good example of it. You keep this thing moving sideways for a while. You get in and get your 6 months in, and guess what? You start seeing those insiders sell. You see the lockup period go, and you got a lot more stock out here, and eventually it catches up to it. Now, one thing right now is we are not busting the lows with higher volume. And at some point, some of these IPOs are going to be worth their while. But I'm going to go back to the example we started the show with, which was a Priceline going and losing 98% of its value. And at that point, it became one of the biggest returns in the world. taking a lot of these IPO bets for the long term can be questionable at best, mostly because the Wall Street is so good at pushing these things out with huge amount of money. And, of course, most of these companies and broker-dealers that do these IPOs get a lot of shares themselves. They want to kind of push these things up and get out at the highs. I suspect when you look at Noodles and Company that a lot of these shares that the street had at the IPO probably got sold in that $38 to $49 range before this thing started gapping down, if they could. Or maybe as it did gap down, maybe that was, they've been selling all along. But watch volume here at the very end. And, of course, even on a day like this where it's kind of hard to figure out what volume is doing, it looks like it's at least going to come in with a similar volume. Andy Heck has been talking a great deal about the cost of wheat and how high it is. What we do see today is Panera with sales down a little bit, expenses going up. Not much different than CMG. When these guys start talking about the cost of production going up and the cost of what they have to buy going up, both Panera and CMG talking about it, these stocks have fallen apart. Of course, this thing has a huge gap, and just like about all these stocks coming back into it, I would suggest that maybe there's a good buy back in here, 145, 142, somewhere in that area, if a volume becomes light. But again, this is not going to be one of these stocks that has an instant turnaround. It's going to need some consolidation. Going to be some people getting out, and there's no guarantee this thing doesn't get higher volume in the coming months out here. Anyway, kind of still beating around the bush on the S&P up 3 points and change, 2.3 billion shares. So not a lot of volume either up or down, and we'll have to kind of keep an eye on this as we go through the end of the day. But, I wanted to go through one. It's not on my list here that I've been watching today, and that is Seagate Technology. I've been talking about this for a while. I think that most of these are in big ABC downs, and if we look at the retracement on this one, what is it, 62? You have one up there? It had a little bit more retrace than you would like to have, but I think still kind of qualify this as a giant short squeeze in this thing. Retraced 69%, and I'm not short this particular one, but certainly made me think that there was a good opportunity for these to fall apart. I saw some ads this morning, actually, from Tiger Direct and Newegg, if you're familiar with computer equipment. Just how cheap these hard drives are becoming. But terabyte hard drives have gone from about $89 a piece in the last couple of months to most of them being under $50 today. And the question is just how many more of these 3, 8, 20 gigabyte drives they're going to sell. Now, certainly in data centers, a good product. But any of the bread and butter products that go into consumer PCs, these things are getting hammered on prices. I'd be watching very closely tonight on Western Digital as it comes out after the bell tonight. But a lot of these stocks, like Seagate, they tried to drive it up today also and just couldn't get it done, and actually lower than the open. This thing traded down to about $51 after earnings last night, and you could see the street guys coming back in and trying to prop this up. Trying to get out exit stage left today. Could be. Lots of noodles. Okay, log me in. RF Micro Devices, one of the winners out here today. And let's go back to a little shorter thing. Another one of these things that's trying to break a previous highs. Got the volume, but it can't handle these highs. Looks like it's going to close lower today than the high on the 24th. Nice open gap, and of course, a company that's had real problems. They made RF filters. And, of course, a lot of that filtering business went away. This used to be a huge high flyer in the 2000s in the big race to get smartphones and just regular cell phones out the door. A huge stock at one time. Less need for RF filters these days. They branched out into some other products for smartphones, and they're doing actually fairly well now, mostly because of the third world and cheap phones over there. And the question is just how good can they get in a business that's pretty much going away, which is RF filters. And at the company I worked for years ago, that RF filter business is what they call a black art. It's not easy stuff. It's all radio frequency, and they all act very weird. It's kind of like the equivalent of quantum physics out there. Nothing quite works the way you think it does, and you just kind of try different things, and it does work a little differently. Again, you can give me a call at 877-927-6648, or you can post a message in the den. If you want me to look at something, let me know. Do you like the jug? Okay, and Ruckus Wireless, this thing's not really doing anything. Rovi, R-O-V-I, not doing too much either. Actually had some pretty big moves earlier. Of course, what everybody's talking about today, and that is Twitter coming down here and busting some of these longer-term lows. Of course, this thing is now under its IPO price, always a death knell. And again, we talked about this when it came out, and I'll bring it back up. I guess I ought to record some of these shows and play them back so I can say, see, I told you so. Not that it wasn't a bad trade on the way up. It's just the average of the way companies that don't make any money fail, and that is pretty much 90% of these companies that don't have it figured out. Now, Facebook figured out a way to make money, or at least that's what they tell us. I'm not so sure about that. But at least they were able to report last quarter and this quarter at least some earnings. And they are making at least some money, even if they're at 99 EPS. The problem with Twitter is it doesn't make money. And these companies, and it's certainly this, coming through with some heavy volume out here at the lows. And just a lot of people doubting what Twitter is now. But there's so many of these dead IPOs that are dead men walking. I think Twitter has its place. The question is all about valuation. Just like Priceline, maybe it's 1% of its valuation here, and it becomes a huge reward. But it's going to take some time for these stocks to find their water level. And we'll be there. We'll be thinking of them. We'll be watching. Anyway, we'll be back in just a minute as we go to break here. We still have plenty of time to give me a ring as we see that future is starting to tick up a little bit. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, I'm watching this volume just go along here, and I think the best thing to do is put the heart rate monitor on the volume of the NYSE right now, and let's just take a quick listen. Yes, it sounds like we've got the flat line going on here, 2.38 billion shares. So volume is not picked up. That means we're probably going to come out with about 2.9, maybe 3 billion shares. So it is going to be a very, very light up day if we continue at this. 1885 up 6.8 points on the S&P cash, but there is certainly no energy out here, so it looks to me like it's going to be a photo finish by the end of the day, and just tough. Now, after the bell tonight, we've got Yelp. It was down a little bit more today, but Yelp, another one of these big IPO companies that came out with a lot of fanfare, and to me, this gap looks to me like what support will be after earnings tonight, or lack of them. You had a high volume low just a few days ago. This thing really hasn't given any sign. Probably the biggest problem with Yelp these days has been legal, and that is that a lot of its customers that have been putting on articles on Yelp. If you're not familiar with it, it's one of those things where you can say how good the restaurant was or how great the dry cleaner was. In the case of a dry cleaner, some fairly famous cases that are making its way all the way up to the Supreme Court on whether or not you have anonymity out there. And what you did find out is that a lot of people on Yelp are actually competitors in the case of the dry cleaners. And his competitor, somebody's competitive dry cleaners put a bunch of horrible reviews for Yelp on it. He had to fight Yelp to actually find out who was the person making these comments, because he didn't think they were actual customers by the way that they wrote the reviews. Didn't act like he was ever in the building. Didn't say anything. So what do we have out here? We've got a company where you're going to be kind of liable for the things that you say on it. Ever since those court cases pretty much decided against Yelp, this thing has started to come back down. Nothing like getting your customers sued by a bunch of irate business owners to do stuff. But certainly we've already gone through the previous low out here, and there's a big gap. And like almost all these tech stocks that had huge run-ups, volume petered out in the last big leg up. It's come down with huge volume, and any kind of bad news at all could get this thing easily back in that 40 to, what was it, about 48 to about $42 range where this big gap had. And that's, you're going to have pretty decent support. So there are some areas where you can actually buy some of these stocks if the market does seem to do a little bit better. But we're going to have to watch this go into the end of the day, because it is looking somewhat problematic in finding that what we have out here is just very, very light volume. We've just ticked over. It's kind of like watching the speedometer in your car in your driveway. You kind of back up and go forward just to hit that 100,000 miles on the odometer. We hit 2.4 billion shares. But again, like I said, this is going to be an extremely, extremely light volume day. Before the FOMC meeting, I was buying some puts out there, and I kind of like those positions. We'll have to see how it does. Anyway, sell when you can, not when you have to. We'll see you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.